Good evening. I've just come on the mic a little bit early, so if you're just watching this as a recording right now, we're going to officially start in just under 5 minutes. So if you are watching this as a recording, going to be watching it in we're starting in about 5 minutes time. So firstly, uh, let's see if the sound is working. For those of you who are just logging in, if you could post a comment just to confirm if the sound is working for you, because I'm not very good at this sort of thing because I don't go on it that often and I always forget how to set it up. So fingers crossed the sound is working this week. Let's see if anyone is responding. I always forget how to do it. You can hear. Yes. Phew, I've managed to work it all out this time. It's really not that difficult, but yeah, so that's good news. Hi, Jude. So, yes, we've got a few minutes and then we'll get cracking on this. So, we've got about 4 minutes to go. Um, so, who was around here today? Were some of you trading today during the course of the day on the back of the inflation figures, perhaps? Let's see, or have you just come in today? Just, oh, okay. Proto, good. Lance, you can hear me okay, that's good. Motorsem, you can hear me, that's all good. JP, great, great, great. It's all working fine, isn't it? So I had this idea at the beginning of the week. I thought, I'm trying to do these broadcasts a little bit more regularly. We haven't started yet. We can't start until 7 o'clock. So wanted to do these just to mix up the video content that goes onto the YouTube channel here, and just put broadcasts out, a little bit more regularly. I'm not talking about every week, but maybe once a month, something like that. So we did one a month or so ago, I guess. And why are some messages not showing? I don't know what. Oh, there it is. There it is. Swold Swallodia, Swallodia Fitness. Okay. So Swallodia Fitness, is that no? I was going to say that's not your JPEG isn't your avatar. That looks like a picture of me. I'm looking down. Is that an old picture of me? Don't know. I can't quite see. So yes. So anyway, wanted to do a. I'm just blabbering at the moment because I can't actually officially start until 7 o'clock. So we've got just about a minute to go. So what we're going to do is when we do get started, I'm going to do a little bit of a review of the markets here. Oh, right. Okay. Right. I couldn't see. It's quite small, but I thought that looks like a picture of me when I used to do a bit of training, a bit more training than I do currently. I was in the gym today, though. So we'll do a little bit of a synopsis review of the markets here, and then basically just to have a leisurely chat as well as we go through. These are quite nice. They're quite laid back. It's a bit of a trader's chat, really. So I'll just go through a little bit of what I've been up to. And hi, some guy. Yeah, we'll just go through a few bits here. So we are at 7 o'clock, so we can officially start now. So welcome and thank you for coming along here this evening to this post CPI session that I wanted to do. So I was in our trading room with our traders today as we were navigating our way through the inflation figures. And yeah, interesting again. So well, I've started off with the S&P here, and because appreciate a lot of people are looking at the stock markets there. Now, interestingly, considering the report itself, hi Razvan. Um, Considering the report itself, the range on the S&P, now there are 2 hours left of trading still in the cash market. The range hasn't been as interesting as some of the ranges elsewhere in some of the currency markets and the likes. So, but nevertheless, the S&P here is nudging against this trend line on my chart here. So I'm just going to take this out to a weekly chart here so that you can get a perspective of this trend line, which I'm sure many of you have on your, if for any of you who trade and look at the S&P or the US indices. So the S&P has a trend line there. If I go to the Nasdaq's got a trend line on its weekly charts coming all the way down as well. So anyway, so I'll go back to the S&P here. So the S&P's come up to this trend line again, and so I do think it's quite an interesting development that we've got here, because the S&P. Oh, what have I done with my pen tool? I need my pen. What have I done with my pen tool? Oh no, it's down. No, it's not. Is that it? No. Okay, let's find Epic Pen. My it disappeared. So I'm just trying to get that up. There it is. So what's been going on here with the S&P is it keeps coming back up to retest this trend line. And when I see, a market that keeps coming back up to retest a level, some traders will see that as, oh, the trend line is strong, and I see it the other way around, that the more tests we get, then the increasing likelihood of there being a break coming. So that's how I tend to see that. At the moment, of course, the S&P's come straight up to that. We'll see how it gets on this evening here. Maybe you can even break out whilst we're sitting here tonight. But never, I still think the moves were prepped here in during the course of this past week. Is that a cup and handle? I think you're probably referring to maybe this move here. Yeah, yeah, pretty much. Yeah, I'd say that. And so you sorry, Proto. I'm going through all of them. Wish you. Well, the Easy Trader stuff's quite old. Is relatively old now, because that we ceased Easy Trader in sort of February of last year. So, but a lot of the content is evergreen. Yes, but um, there's plenty of content on here as well. I tend to try and put 2 videos out a week, Proto. Yeah. Um, so yeah, so there is a bit of a cup and a handle here. So, but whatever, if we see that or whatever, we're seeing the potential for a trend line break there. Don't know how I managed to move my trend line there. Now I've just messed it all up, haven't I? There we go. I'll do. So that's the potential there for another or for a breakout coming. And for me, I've also got, as you can see, I've got this horizontal line here. So if I take us back out to a weekly chart, you can see this horizontal line around about 4150. Around about 4150 is the next key resistance zone. You can see it tallies all the way back through these prior lows, spike lows, lows over here, and open and closes areas over here as well. So there's a lot of traction through this level here. So around about 4150 as well. So I do think the S&P is interesting. Is it going to break out imminently? I don't know. Could it? I think it should have an attempt. Could it pull back and consolidate for a few days or whatever? You know what the markets are like, back here. Um, so it could consolidate for a few days, but certainly one would think that traders would at least try and take it up and break out of that level, because it's a widely watched level. that trend line is highly anticipated. It's highly watched. So it could still be that price comes off a little bit from there first. Um, Even if it is going to ultimately try and attempt, then it could still back off first. Do I use Fibbo? No, I don't. Not in the main. Now and again, I'll put a fib on. If I go to a monthly chart, for example, uh, one fib levels that I have previously done is fib retracement. There we go. And if I take the lows of 2009, and I think I've talked about this before, and then I take it up to the highs of the beginning of 2022, um, then it gives a pretty much a 38% retracement down at around about 32. Probably haven't quite put this on accurately, but anyway, we'll call it 32.30. Okay, so that's a 38% retracement. So it's coming in around here. So let me just get rid of that. So that's coming in a bit lower down here. So I have looked at that previously, and I think that if the market was to roll over at some point, then that level could well come into play. But for now, the markets are heading up, and we'll see how they get on from here. But I don't tend to use fibs a lot. It's absolutely fine. It's widely used globally. But I think you have to just go with whatever you favor. There's no point in me trying to use everything. So now and again, I will put a fib on a chart, especially if there's been a long trend, then that's when I'm more likely to do it. But I don't use them a lot, no. So that's where we got to today. So we did have a little bit of up and down. If we go to the euro dollar, which is the proxy for the dollar index, then the euro dollar's had a nice run here today, but it wasn't easy. Because as many of you all know, if I go down to the hourly chart here, the market actually shoved down initially, actually just in the seconds before, about 30 seconds, 40 seconds before the release, the euro started really moving. And we're thinking, it went up actually before the release. And we're thinking, okay, has there been a leak? Because the spreads widened out, and about 40 seconds or so beforehand, it started going higher. Then came rushing down, then settled for a bit, and then came up. So it wasn't as straightforward as you would think just by looking at a chart now. And then, of course, gave back much of those gains in the next bar. So at this point, you're thinking, oh, okay, anything could happen now. Maybe we sell off and we follow through to the downside. And then it just sort of settled. And then as we went through the afternoon, it's picked up to the upside. So, and the daily bar right now is looking reasonable. As you can see on the euro dollar chart here, I've got a channel, which I'm sure many of you have got something similar on. So we keep on trading and nudging up against the upper rising trend channel line. If I come out to the weekly chart, no, I'm going to need to go to the monthly to show this next trend line going way back to 2008, the highs of 2008, and we've got this trend line declining all the way through. And you can see that the euro has now managed to get through this trend line. It was trying to deal with it at the beginning of this month, just a week ago. It was reacting to it, but as you can see, it's now pushed on through. So interesting stuff here. That's the monthly chart there, just to show that trend line. If I take us back to the daily chart, we see that channel there. So as it currently stands, got a few moving averages here, some short-term moving averages coming up underneath price. So it does look interesting at the moment. They all do really. I'll go to the sterling as well, to the pound dollar. It's got a bit of catching up to do with, in relative terms, to where the euro is. So it's got a bit of a run to get back up to its highs of December. Whereas if I go back to the euro's already by a long shot already cleared those highs. Don't get me wrong, a lot of these currencies, they keep on coming up into, and the euro, into resistance on their higher time frames. So the euro, although it's a nice push here today, there is more resistance coming in between 109 and 110. So even if it has a bit more, it's constantly hitting up against resistance levels. But one of the other key drivers, so although we've had the CPI today, it brought a bit of volatility, but the numbers, as you know, came in pretty much in line with forecasts. Um, so we had a bit of volatility, but it really took a while took the afternoon to in the UK here to get going. But there is another factor at play here, and this is this dollar yen. And this dollar yen story that's building. There was early doors this morning. There was yet another a report out about the Bank of Japan reviewing their policies, and we keep on getting these little snippets of information coming out about the from the government as well, encouraging companies to increase wages. So they're really trying to stem inflation, and we could be seeing this big policy pivot there towards a tightening of policy of monetary policy there. So we're seeing the yen strengthen here against the dollar, and there will be overspills from this. So this is going to be a key story. Just so that you're aware, over the next week, we've got, I think it's Bank of Japan next week. So this could well be a developing story as bits and pieces of information come out about these subtle hints at what's coming. And so if that equals a stronger yen and therefore a weaker dollar, we can see overspill into other currencies as well. So anyway, that's one to watch, is the dollar yen there as well. Don't get me wrong, the dollar yen, if I come to the monthly chart, I'll come to you in a second, Razvan. If we come to the monthly chart, it's a wonderful pullback on the monthlies. It's come down to the midline of this channel here on the monthly time frame. But it can overshoot, of course. It's got a 20 moving average here. I have a 20 period moving average is my blue one. And it could want to overshoot and come down to there. And obviously the technical levels back down, which come in at pretty much the same level here, around the 125 or so area. So we're currently at 129. So there is scope there for more downside to come into that next zone of these prior highs as well. But we are into mid channel as well. So we'll see. But that story is developing. So we'll see how that plays out. Okay, so going back to the euro here, and I'm going back to it because Razan's mentioned something. Let's have a look, see what he's saying here. Monthly chart, okay. We had an initial break, but the price came back. Why? What of the trend line there? Of that trend line, Razan? Is that what you're talking about? We had an initial break, and then price came back. Oh, maybe you're talking. You said on the monthly chart, yeah. I don't know, initial break of something. You're going to need to explain a little bit more there. Obviously, you're probably typing at the moment. German Adolfo Bar. Charlie, you have a metric on the SPX down. The minimum was 1.618 of 0 to 1 from 2 weekly exact. I'm sorry, I don't understand your comment. I don't understand, but it's not reading very clearly for me, the English. So I'm sorry about that. I don't really understand. But obviously you were using some form of fib extensions or whatever. So oh yeah, 2,794. Okay, let's go back to the SPX here. Or I'll take it to yeah, that's fine. 2,790. Oh, okay. So you're looking at for the S&P to come lower. I think that's what you're saying. I think that's what you're saying there. I think that's what you're looking for. I'm just seeing 2,794 as a 2.618. So I'm assuming you're talking about that. I'm switching from person to person here because of the different comments. So back to the euro, the previous lower high. Okay, let's go have a look. Oh, maybe you're talking about here. If I zoom in, maybe are you talking about here when it broke these highs? Is that what you mean? You're talking about a previous lower high and then retracing back. You're talking about on a monthly, so I'm trying to see what you're talking about. I'm assuming you mean this. So what I'll do is I'll actually go to a weekly chart and we might see it a bit clearer. I think maybe you're talking about this. Oh, on top of that, what? I don't even know what you're talking about. Sometimes it's hard to interpret what people are saying. So you're saying a lower high on, well, that's the last lower high. So, and you're talking about a pullback. You said on the monthly chart on the euro dollar, we had an initial break, but then price came back. Why? And I try. That's the last lower high. You're saying on top of that. I haven't got a clue what on top of that means. So, sorry, Razan, I can't understand what you're saying there. But look, the euro pulled back because it hit resistance. That's the reason why the euro dollar pulled back, because it was hitting a lot of resistance. So there were a lot of traders who were seeing the euro coming up into that long-term trend line there, as I've just shown. There will be a lot of traders who would have been trading that, um, and and among other things as well. The trend channel here. Lots of traders would have had this trend channel on, and traders would have been shorting the euro off of that as well. So the pullback will have, and traders will have been banking profits who might have been long as well. So I think that's the reality, that there were technical levels, yes. Whether it's a level that I can't quite identify what you're talking about there, but yeah, there was plenty of levels, yes. So as to why, prices pull back one or two things, either because of profit taking, or because of new sellers are coming in, short sellers are coming in up in those areas. So and combined with therefore a lack of overall demand to keep pushing the price at that point or for a period. But what happened last week, of course, was those really weak ISM services figures, which showed sort of contraction there. And I think in the US, we've been in this for what, a year or so now, where bad news is seen to be good news. And so you're getting bad news coming out for the US economy, and then stock markets go up, and because why? Because market participants are looking at the Fed and inflation, and if they see a cooling economy on the back of some poorer economic releases, then they see that okay, inflation may come down, and therefore, if the economy cools, then the Federal Reserve won't need to keep hiking rates at the same sort of paces that they have been. So, and therefore, that's better for stocks if market participants can see the potential end game, the end in sight for that peak interest rate, and for when rates might start coming down. The markets are forward looking, aren't they? So they're not always right, but then nevertheless they always look forward looking. So yeah, at the moment the market took that information last week, and then the market cheers it, and so we see stock markets go higher on the day, and on that day last Friday, and the dollar fall on that day as well. So it's interesting. What do you look for before entering a trade? Yeah, good question. And also, what timeframes do you usually execute on? Um, excuse me. The reason I'm taking my time here is because I don't think it's something that I'm going to try and explain, but I don't think it's something, it's not an ABC type. Oh, right, I do this, and this, and then I trade. I save that for the babies and the kindergarten cops out there, sort of thing. It's not as straightforward as that. So what I am doing is I am analyzing the markets based on its own criteria. So um, I am looking at where are we, no, technical analysis first and foremost. Where are we relative to support and resistance, or supply and demand, if you want to call it that? Um, And I will have trend lines on, and I'll have channels on, and I'll have moving averages on. So what I'm looking at is where are we relative to all of that, and then I'm trying to build a picture as to what direction I think overall on the bigger picture. So I will go all the way out to quarterly charts, and then I'll go quarterly chart, monthly, weekly, and daily. And even with all of that analysis, so I'm doing a top-down approach um, to build a picture. So I will either be executing off a daily chart, or it could be a 4-hour or even an hourly chart. Today, I was trading off of an hourly chart. I'm not day trading, but I'm using the intraday charts to execute trades. So not always, it's not always the case. It's just because it was a news day, and so we had some views. Or I had a view, but all of that view is based on I only execute in the direction of where I think the market's going. And so I'm doing top-down approach from a technical analysis perspective. If I get a sense of the current market sentiment, what market participants are doing out there, then I will take that on board as well. So we know that this week, over 70% of retail traders globally have been shorting or are net short the likes of the euro dollar. And so that's something that I'll take into consideration. But the thing is, they've been net short since the 4th of November. So again, you've got to look at the overall trend of that, because they've been underwater, so to speak, or many of them will have been since November. And so because they don't use stops and stuff like that. So so I will take that on board as well. And it's funny actually, this week, I'll use sentiment against myself as well. So sometimes I'll look at the you look at the market, and you only want to you see where the comfortable trade is. What's comfortable with you? But actually, if many of you have been trading very long, you know that some of the very best trades you ever have are the trades that feel very uncomfortable at outset. So I will always be looking at, where's the market trying to go, and all of that, and also measure by myself to say, well, where do I feel most comfortable? Because then that's where probably a lot of other participants are. And so for me, the comfortable side would have been to have shorted the market. So that's not what I've been doing this week. um, but really, I mean, looking at the euro dollar, for example, at the moment, I think the euro dollar could have gone either way. My analysis, when I go out to the bigger picture, is there's scope for movement in either direction. And so I had to be willing on this occasion. It's not always like that, but I had to be willing on this occasion to trade on either side. But I knew that the short side is where the retail public are, and where a lot of people I think were looking towards. And so I've had to be looking at the long side this week because of sentiment as well. So there's all sorts of factors that go in. But yeah, in the main, if I come out to a monthly chart, and if I take this out, you can see that it's bog standard technical analysis, and then it's just how I interpret this long-term channel here on the euro dollar, and this declining trend line here. We've got the little minor channel on, let's say, on the daily chart. So I'm looking at technical support. It's technical levels, but then it's getting a read of at what point is price going to want to move towards the next level. And that's something that takes a bit of time, because the markets, I always say, they like to gravitate like a homing beacon to trend lines that they haven't revisited for a while. They want to go back and retest trend levels, obviously technical support and resistance level, horizontal levels, and key moving averages such as 50-day moving or 50 period moving averages, 200 period moving averages. They do act like I said, like a tractor beam towards price. So I bring all of that in together, and I can't teach that in a in a 5 minute précis here. It takes trade after trade after trade is what I'm doing with my members in the trading room, because every single chart is different. It's got its own unique personality. There's a different level of analysis, but bit by bit, what we do is the same thing over and over again. Top down analysis. What's the fundamentals? Where's the sentiment at? And then yes, execute off of a smaller time frame, and that then depends. If I'm getting in on the back of some news, then it could well be that I'm trading off an hourly or 2 hour or 4 hour chart. But otherwise, then quite often I'm just trading off of a daily chart. So hopefully that sort of answers. But it's really not a 1 + 2 = 3 scenario. It's a lot deeper than that as far as the analysis is concerned. But it really is technical analysis combined with how I use technical analysis, and so and how I interpret that. So that's what I do. Sorry, right? Let's go back. Um, oh, back to the euro. Okay, the monthly here, right? Oh, okay. Are you talking about this breakdown? I'm just going back to your question again and trying to understand your question. On the monthly chart, the euro dollar, we had an initial break, but price came back. Why? Um, oh, okay. Maybe you're talking about we're talking about the breakdown in last year. Maybe is that what you mean? Is that what you mean? The breakdown in last year? You're saying it broke in 2021. Is that when it came down? 2022. I'm still trying to understand what you're talking about. I really don't. That's 2020. It broke down in 2022 last year. Maybe that's what you mean. I think that's what you're. Maybe that's what you're meaning. I'm assuming you're meaning when we sort of broke this whole level here, broke down, and then we came back up. Maybe that's what you're meaning. You're not explaining yourself very well. So maybe that's what you mean. Can you just say yes or no? If it's a no, then I give up. um, but if that's what you mean, then I can answer. But if it's not, then I can't. Obviously, you're not answering. So okay, maybe he's gone off. I don't know. Okay, well, I'll move on to the next comment here. Ukraine. Oh, okay, right. Can you tell us, when did you consider yourself a profitable, consistent trader? What were the signs? Um, One thing I'm going to say right now is I hate the word consistent. I think it does more damage than good, because people have it in their head consistency, i.e., making an income from the market, having a regular sort of paycheck from the market. And anyone who has got a bit of experience knows that the market is not it's not a job. It doesn't pay a regular salary. So um, but I sort of know what you mean, though. I think I know what you mean. Yeah, a profitable trader. Because when you say consistent, I just think, oh, you're. I have to say that because people associate that with making money all of the time, and you don't make money all of the time in the markets. So because every trader has losing trades. So so to answer you there, as far as that's concerned, certainly I was into my third year of trading. I would say into my third year of trading that I started to. You were saying there were signs, and it was in my third year of trading, and I've talked about this many times before. But my equity curve was doing this. Okay, so it was generally swinging, like this. So generally not really going too far. I'd have really nice upswings and then give most of it back. And then really nice upswing, give most of it back. So it wasn't doing a lot in my when I started trading. I was still full time, working full time at that point. Um, but I knew that I could have some really nice upswings. But what was going on here and here, oops, and here was the problem. So, and what it was a lack of discipline. So what would happen is I would get overconfident. I'll put OC here, and overconfident here, and overconfident here. After a winning spell, I would get overconfident. And then once you get overconfident, um, you start taking trades that you wouldn't have otherwise taken um, when you were in this disciplined phase here. And you start to get, or I would start taking bigger position size as well. And then if I had a couple of losers, I would try and revenge trade to make it back. And then all of a sudden, my equity would start coming down. So I spotted this pattern of behavior. And that for me was my big aha moment, really. And once I'd spotted this, so this was the sign. And so I realized that if I could just maintain that discipline better, then I wouldn't have, you know, this. I'm more likely to have, well, not that, but a more of a rising equity curve like that. And so that was my aha. That was my moment, really, my light bulb moment, really, in answer to your question. So that was the big thing. How often do you use the MACD? Well, it's always here on the bottom of my chart. So I do use it quite a bit, but to say how often, again, um, it is used, but price always comes first. Support, resistance, seeing where price is first and foremost, and then any indicator that I use might act as supporting evidence to help me get into a trade. So that's how I would try to explain the MACD, because you've got to bear in mind, I do top-down analysis, a top-down approach. Analysis first, and then execute second. What a lot of traders go out there do is they're looking for a pattern. Or they're blinkered and they're looking for a pattern on a given time frame, and they want to just trade that in a mechanical way. That's not how I trade. So I trade in a top-down analysis approach, and then I have strategies to get me in the direction of the overall analysis. Whereas a lot of people have strategies and they just trade these strategies in more of a blinkered way. So I don't trade that way. And it's the same with using any indicator. I will use the indicator when it's appropriate to use it in line with my overall analysis. So hopefully that answers that question there. There's not like, oh yes, I use it 70% of the time or 50%. I couldn't give you that. But what I can say to you is, yes, I do use it, but I'm not looking down at this indicator. When I'm looking at a chart right now, I'm not looking at the indicator, not at all. I'm looking at all the stuff on the chart, on the price chart. The indicator comes second. So I'm not actually particularly looking at the indicator down here. It just stays on the chart, but I'm not really using it in that way. The indicator does not form my analysis. The indicator is used. I have certain ways of using an MACD at given times, and then I will use it. Okay. Do you know any consistent profitable trader who is not trading only majors? Can a trader focus on minors? Uh, I can you know any who is not trading only majors? Yes, I do. Yeah. But why do you feel you need to be trading minors? So yes, I do. But why? What's the problem for you in just trading majors? I would say to you, because Probably one of the best things you can do is just trade the most liquid currencies. Why do you want to go off trading all the crosses? Is it you're bored? Is it you need action? Is it you need more markets to trade? So you look, most of you would have seen the trading challenge that I'm in the middle of at the moment. What did I do last year? 130% or whatever. It's up nearly whatever it was, 400% overall since I've started it. Um, and most of the trading is done on the euro dollar, and a couple of other markets here and there. Um, I'm trying to prove to people and show people that you don't need to have a watch list of 25 different markets. You can actually focus on just a few markets, and just trade those. So that would be my question to you. Um, that you don't need it, and why do you want it? Does it want more action? Because more action doesn't equal more profits. You do understand that. I think a lot of people think that they need to be doing something a lot of the time, and it's not necessarily the case. I mean, I'm pretty much always in trades, but I'm not taking 5 new trades a week. You I'm taking trades. Some weeks I might do, but most of the time that is not the case. So, and yet I can still put in some pretty good performance. So, y- if you focus more on, let's say, 10 different markets and or less, you may actually find you get on better and have the patience to not feel like you've got to be taking X number of trades a week or whatever. So, just a tip for you there. Um, which indicator would you prefer between RSI and the MACD? Yeah, you're missing the point again. um, well, every indicator has its own unique qualities, really. So, oh, good, fitness, yeah, good stuff. So, every indicator has its own unique strengths and weaknesses. So, comparing an RSI and a MACD, why would you do that? Because they both will have different strengths and slightly different weaknesses. So, I don't think you can compare that, or you should compare them like that. So, um, fun enough, I do use both, but again, I will pick them out at certain times. I have a very specific way that I use the RSI indicator, and then I will again apply it at given times in the market based on the analysis, the price chart that comes first, and all of that, and then any indicators or anything or price patterns that I'm using um, are then the excuse to get in based on the direction that my analysis is looking at. Maybe there's more opportunities working with more markets. Um, yeah, this is what I'm saying. I don't think you need to. That's what I've just said. I don't think you need to. You I'm not saying you can't, but I don't think you need to. That's what I'm trying to get across. There's an old expression, less is more. And I think in trading, a lot of people get it wrong because they think they've got to be trading a lot. And then they just scurry around and they spend year after year trying to trade loads of different markets, loads of different patterns, hopping from strategy to strategy to strategy, and then eventually they come to Charlie Burton Trading or whatever and say, "Ah, right, yeah, I've tried all these things." And he's like, "Right, okay, let's strip that down. Let's make it a little bit more, you know, calm your whole trading down and trade in a better way overall." So I'm I have traders who intraday trade, but and I have traders who swing trade off of, let's say, 4 hour time frames. So by default they will be taking more trades than I take. But what I'm trying to say is you don't have to be doing lots and lots. Please understand that more trades doesn't equal more profits. Okay, so you box clever. So So just because you're doing more trades doesn't mean more profits necessarily. That's why I do the trading challenges, to show people what I'm up to, and that actually it's not a lot of trades. Not, I'm almost constantly in a trade or another throughout the year, but I'm not taking 10 trades a day or 10 trades a week or anything like that. I focus on a few trades, and then I try to capitalize on the profitable trades when I'm in them. So you're not going to get an answer from me about trading more, because I'm going to be saying to you, I think you should need to trade less. Because from the information that I get from brokers and from my asset managers who regulate me with my funds, um, most traders overtrade, trade too much, and if they traded less, they might actually fare better. So obviously, I don't know anything about your circumstances, but yeah, that's my general advice, is what I'd say there. How old were you when you started trading? 20, oh, uh, 25, about 25. Yeah, about 25. So I'm in my 25th year right now. How can you trade? How can we trade when there is no real clear trend, no volatility for such a long time? Like Eurodollar 2018-19 was so hard. It's hard for me. Yeah, it's a good point. How can we trade when there's no clear trend? I think the difficulty is that you you know when there's no trend after the fact. So afterwards we can see there's no clear trend, but we don't know that when you're in the middle of it necessarily, because there are times when it looks like a new trend is developing. So you're absolutely right, that was a difficult time. And so and that was funny enough, a period where I had my longest drawdown period of about 6 months in that latter part of 2018 going into 2019. But I guess because of the years that I've been trading, a newer trader would be like pulling their hair out and quitting, and thinking, "Oh, I've got to go and trade different markets." Whereas I know, because I've been doing this for long enough, that the patterns and the new trends will come through. So I just ride it. And so whereas another trader will be, right, that's it, I'm off trading something else now, because they don't have the patience. So so yeah. So you can't always know, unfortunately. And I didn't know, I couldn't know when I was trading during that. It looked like there was going to be some nice moves, and it would start moving and then just come back off again. So it was a bit like that. You're right. Um, if you have the time, could you please open 5 minutes chart or any small chart and analyze a trading opportunity that you would have taken today or any day, or maybe you have taken, and explain it? Uh, No. It's a good question, but I don't trade 5 minute charts anymore. So there is absolutely no point in me bringing up a 5 minute chart, which I can do here, of the Eurodollar. Um, what's the point in me bringing this up and saying, "Oh, I would have done this or I would have done that"? That's not good. As far as you get trading educators saying all this sort of stuff after the fact. "Oh yes, I bought here and I sold here and I bought there and I sold there." They're talking out of their backsides, because I've seen so many trading educators actually, when if they ever have put their necks on the line, actually don't always do what they say they do. So I'm going to just be transparent and honest with you and say, look, I don't trade a 5 minute chart. So there's no point in me saying, "Oh, I would have bought here or I would have sold there," because anybody could say that sort of thing. So I'm not going to say that. And I think the other thing, coming to a 5 minute chart, if I can give you any advice, especially a newer trader, anyone who's been trading less than a year, I would say don't even think about day trading. So that's my advice to you, because if you're day trading and you've only been trading less than a year, you're likely going to lose money. I can tell you that right now. You're highly likely going to lose money, because you haven't developed the mental resilience in the markets at this stage. So you're more likely to jump into trades when the markets are firing off one direction or another, getting emotional, revenge trading, the list will go on. So whereas if you do more of even semi-swing trading, just trading off of like a 4-hour chart, it slows it all down, slows the intensity down for you, um, and you're not having to sit there staring at screens all day long. So when you become more experienced, and I mean experienced from a not just a technical perspective, but also from a mindset perspective, then yes. But I wouldn't recommend going straight into day trading, because I think that that's one of the reasons why so many people lose money, because they want to go into short-term trading. So I'm not going to advise it. So sorry about that, but hopefully you understand. Hi, Dean. How are you? Can you explain the difference between support and resistance and supply and demand zones, if there is any? Yeah, Dean. No. It's just a technical expression. Some people call it supply and demand, and others call it support and resistance. It's the same thing. I'm hearing more of these youngsters now talking about price structure and and, all, and liquidity zones, bro. We need some liquidity zones, bro. It's just nonsense. So they're just words. So support and resistance, it's where prior lows are, and the same as supply and demand. It's just a technical expression. Some people like calling it supply and demand, other people like calling it support and resistance. So no difference there. I'm making myself laugh using my younger. I'm too old to use the words bro, you see, so it's just I find it funny. Um, uh, and the live trading ones, yeah. I mean, I used to do these live trading ones. People were talking about the old live trading videos I used to do on a Friday. I did them for years, but um, I've learned from, as I've developed, what I've realized is, as I've developed my appreciation of the wider community out there, that most people look, we know that most traders lose money anyway, but it's even an even greater percentage lose money who go straight in with day trading. So you should see day trading as a secondary endeavor and get good at swing trading first. I'm not, and trade off 4-hour charts or something like that. So um, I don't even day trade anymore, as many of you know, and I don't day trade because it takes up a lot of time. I have a whole business to run. I have to have some form of balance in my life between when I'm sat here in my office and walking the dog, going to the gym, and all of that sort of stuff as well. So, um, yes, I've day traded in the past, and yes, I've won trading competitions and that. Fun enough, I've been invited to a day trading competition, which is being organised, I think, by Pepperstone at some point in this first quarter. And I said to them when they asked me, I said, look, I don't really day trade anymore. They said, that's okay. Can you just come along anyway? I'm like, okay, but I'm going to have to tell your audience that although I will day trade on the day, it's not what I do day in, day out. And the reason I don't do it is because I can make just as much money swing trading and I have more time. What would you rather do? Would you have more time available to you and make just as much money, or sit there staring at a screen all day long being stressed? Not that I ever found day trading stressful, but a lot of people do. So, just I'm just trying to save you some time and energy, really. I don't want to put people off who are experienced day traders, of course, but that's what I'm saying. Get experience first, and then if you still want to go to day trading, then fine. But don't think, and I do think that people associate more trading with more money. And it's not necessarily the case. You can make just as much money from swing trading as you can, and so therefore a lower frequency as you can from day trading. Okay, right, that's enough on that. What do you think about correlation if you trade multiple pairs? Yeah, Atard. Yeah, I think that's a good point. I think if absolutely, you do need to be very much aware of positive correlations if you are trading multiple markets. And so, for example, a very obvious example would be if you're going long euro dollar and you're also going long Aussie dollar and you're going long Kiwi dollar, then you're very heavily dollar short across three different markets. Now, that's a very obvious example there, but there are also more subtle examples as well. So you could be long the S&P and long euro dollar, full fat. Well, they are fairly well correlated to one another as well. Um, so I think that is something that you need to be aware of. Yeah. You don't need to be trading lots of different markets if because sometimes, a lot of the time, they're heavily correlated. They're positive correlated. What book would you recommend on technical analysis? On technical analysis, hold on, let me have a look. I don't think I've got it there anymore. I can't remember. It was like the Bible of technical analysis by, oh, I can't remember. Someone will remember it. But there is one book, and it's about that thick. And I don't know, it might be upstairs, and I can't remember the name of it off the top of my head. And it was written like 20, 30 years ago, maybe in the 1980s, but it's still brilliant, a great book. If you want to read a book on technical analysis, then then yes, but I can't remember it off the top of my head. I'll have to try and find it. Um, I've seen all your videos. Wow, in YouTube, BBC documentary. Yes, all the interviews, all videos. Well, you get a Brucey bonus for that, then, Proto. um, that's very nice of you. Yeah. Um, do you use market structure? Yes, yes. I'm laughing because that seems to be like an in word right now. Market structure, as I was just joking about earlier on. Market structure is just technical analysis. And yet, of course, you get these newer people out there on the social media and stuff saying, "Oh, you got to do market structure." Yeah, it's just technical analysis. So do I use market structure? Yeah, because it's technical analysis. I don't use those gimmicky words. So yes, I do. What do you think about order flow charts? Are they really needed to be a profitable trader? Well, fair and square. Do I use them? No. And so, am I profitable as a trader? Yes. So, no, you don't. It's just yet another thing out there. Look, I've been doing this 25 years, and there's always stuff over the years that people are selling to say, look, you've got to use this thing, this magical indicator or this theory or whatever. No single thing is going to make you money 100% of the time, or is going to give you wins 100% of the time. There's no such thing. And order flow, whatever, it's not going to make, there's a lot of people using, or I say a lot of people using, but a lot of people talking about it. Volume profile as well. And I've looked at volume profile and chucked it in the bin like years ago. It's not that it doesn't work or it couldn't work for some people, but I looked at it and thought, no, for me, there's no discernible edge. Maybe there is for some, but again, it's just saying that, if I'd have liked it, I'd have used it. And so trading is a personal thing. And so what works for one person may not work for another, because it does come down to to a certain degree, what suits us as a person as well. So, you can ask me, what do I think of, what do you say, order flow charts? But no, they don't. No singular thing is any better than the other than another. What makes you money in the markets is your risk management, being good at your risk management, and making more money on your winning trades than on your losing trades. In essence, that's that. That's the basics of it. So, any indicators or whatever it might be that you're using is going to be right part of the time, not all of the time. And so you've just got to get really good at your mindset, because it's the mindset. That's why I talk about mindset on most of my videos, because it's your mindset which makes you money, not your style or your technique. Stop being a strategy hopper. Like a lot of people will just go from one strategy to another because they're still searching for what? The holy grail. The holy grail of trading and profitable trading is really getting this right. And that does take time, developing the mindset, to be able to deal with the knocks that the market gives you, to be able to deal with, fear and greed and all of those things, and frustrations when you just have a few stop outs, one after the other, to be able to deal with all that and not react in the wrong way, And so that does take time, and that's got nothing to do with strategies. Can you or anybody out there, MT4 platforms froze up when the news came out today? I have one live and one MT4 demo, both jammed up, plus was talking to someone else. Also, their MT4 platforms froze. Well, with different brokers. Um, Brokers do that. So what happens? It's not MT4. Um, Quite a few brokers will actually build in, because they behind it they've got their own back end to MT4, so they can slow it down during key news announcements. So that a lot of brokers will deliberately do that, because they don't want people like jumping in, jumping out in a couple of seconds and stuff against them. So they will deliberately slow those platforms down. So not every broker does it. Pepperstone, as an example, they weren't doing it today. But I do hear of things like that. But that's because it's the broker that's doing it. It's not MT4. There's nothing wrong with MT4. The broker can slow it down from their side. So, what percentage of your account do you enter a trade? It depends on the accounts. I trade 6 different accounts now. So, and all of them have a different attitude to risk. So, on the most conservative, I might risk 0.1% on a trade or less. On the most aggressive, so like the challenge account, then I'll trade anything up to 2% on a trade. So it's quite a big difference, but no more than 2%. Do you use Bloomberg Terminal or similar service? Nope. I don't feel like I would use a Bloomberg Terminal. I don't need it. It's a wonderful program. So if you can afford it, because it's very expensive, if you can afford it, then yeah, it's a lovely piece of kit. But I wouldn't use all of its functionality. I don't even use most of what TradingView charts functionality is. I keep things fairly simple, and so I don't use a lot of the functionality that you have out there. So I wouldn't be using it anyway. So, and it's, again, it's not some holy grail that's going to make you a better trader. Don't think that it is. It's just going to give you a load of information, which will probably end up making you more confused about making decisions. So sometimes keeping it simple is better. How do you set and calculate your stop loss? Alpharis. The answer to that really is it does depend. It depends on the setup. It's not something as simple as, oh, I do this, this, and this. trading really isn't that straightforward. So because every setup is slightly different. So sometimes I'll have a stop loss below, if there's a prior low close to where I've entered, then I'll put a stop below the low. Sometimes I might put a stop below a moving average, for example. And so it really does depend. It depends on the setup itself. So it's not as straightforward as saying, "Oh yes, just do this, this, and this." But I have no issues with if I'm trading. If I bring up a pen here, of putting a stop below a low. Again, you get a lot of people out there saying, "Oh, the market that will be coming out to get you if you have a stop below a low or whatever." Yeah, okay. Well, and if it comes down and gets me and then turns back up again, then I'll just get back in, won't I? What's the big deal? And they prey on your fears of losing, because these guys are so good at marketing that they prey on your fears of losing, that, oh, the market makers are out to get you and the banks are out to get you. And, they're going to move the market again. Yeah. Look, the amount of times that you have a stop and you put it below a low and the market never goes back there, look, and you put it below this low here. Oh, no, no, price never came back to that one either, So I don't have any issues with putting a stop below a low, or below a high if I'm shorting. So sometimes I might put it a bit further down. Again, there's individual circumstances which might vary that, um, but um, but yeah, it's not quite as straightforward as oh, I do this thing every single time, because it depends on the nature of the trade. Am I in a trend-based trade? Am I in a counter bet trend-based trade? So there's lots of variables there. How do you get enough trade volume from just swinging one pair? Because on the weekly time frame you showed us previously, you made most profits in 6 trades. Yeah, that's right. Yeah, um, that's the magic juice, isn't it, Atard? So if I go back to the weekly here, I was doing that when I did the update in whenever it was, November or December. December it must have been. I don't know if it was the weeklies. I think I was probably showing it on the daily charts through last year. Yeah, I made the bulk of my gains on 6 trades. There's a combination going on. So I will vary my position size based on my attitude towards the trade as well. Again, that comes from experience. So I don't just, again, have that singularity of, oh, I'm going to risk 1% on every trade. Da, 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 da. That's fine when you're a newer trader because it gives you some structure. But really, as you become more experienced, um, being able to have some form of variance in the position size is key. So, for example, let's say I have a list of 10 boxes that have got to be ticked in order for me to take a full size position. Um, so if only 7 of those boxes get ticked, I might still take the trade, but it won't be a full size position. Do you see what I mean? Just I'm making that quite simple there. So I will grade the trade, and then accordingly, I may downsize the position. So that's one thing I do. So although I take quite a lot of losers, a lot of the losers are, you know, they're not even a full size loss. If a full size was, let's say, 1%, a lot of them actually are not even a full size loss because I've not actually put a full size position on. But then if I've got, a number of trades which actually hit, all of those 10 criteria, then I might then put the full size position on. So therefore, I'm going to make way more than what I lose on the losers. Plus, the other secret to this, it's not really a hidden secret, I've talked about it plenty of times, is I add to my winners. So it's not just, oh, yeah, you just took 6 trades and that made you all that money. Yeah, but I'm adding to the winners as they go in my favor as well. So that's really where the money comes from. So no, it's not simple trading, doing what I do. So although you think, oh, it's only trading, euro dollar most of the time, yes, but I'm grading the trades, I'm position sizing, and I'm also then adding to trades when the trades go in my favor. So, and that's what delivers the returns. Um, oh, that's the one. Yes, the book written by Edwards and McGee. Edwards and Murphy. Sorry, John J. Murphy. Yes, that John J. Murphy's book on technical analysis. If anyone wants a book on technical analysis, go out and buy that. That is the only book you need. Yes, yeah, that's the one. Uh, Uh, sorry, Mem. I've only just come to your point there, saying they're cheating us to stop us making money. Thanks. Yeah, I can't remember what that's referring to now, Mem. You'll have to write it down again because I've already moved on from that. Is it late to start trading in the 40s and 50s? No, not at all. I wish could learn 20 years ago. No, not at all. We have people that start at all ages. The advantage to someone starting trading in their 40s and 50s is that you're probably going to be a bit more responsible as a trader with regards to your risk management and all of that. So there are advantages to starting when you're later as well. So you're a bit more worldly wise than someone who might be in their 20s. So um, how do you prepare your mind before the market open? Um, well, I don't trade like that anymore, Dyer, because I'm not sitting down to day trade every day. I come into my office and I am in front of the markets every day, but I'm not executing new trades necessarily every day. So I'm not having to prepare my mind, right? The market's opening. I better get my mind ready. So I'm not having to do that. However, um, one of the best ways, certainly when I used to day trade, I would always do a bit of visualization just for a minute or two in the morning and just to visualize myself executing well and following my plan, my trading plan throughout the day. So I would do a bit of that. And nowadays, essentially, in order to keep on top of my mindset, that's where the analysis comes from. So I don't just go and do a load of analysis, let's say on the euro dollar here, and say, right, okay, I've got that now, and don't do any more. I do the euro, I'll do a load of analysis, and then I'll go and repeat it the following day, or probably twice a day. So I'm repeating the same analysis over and over again, changing the charts around. I invert my charts. I find that really useful as well. I'm looking at obviously intermarket analysis as well, because you don't just analyze one market. I may trade the euro a lot, but I'm doing loads of analysis on Aussie dollar, Kiwi dollar, pound dollar, dollar yen, because they're all interrelated. So there's a lot of analysis that goes on, and then I repeat it and I go over and over and over again, week after week after week, because things change obviously as markets move around from week to week, and so adjustments sometimes have to be done within the analysis as well. But that is what gives me the mindset for when I am in a trade to be comfortable with the trade and have the conviction behind the trade. So it's analysis, analysis, analysis. Repetition is key. Going back over all the reasons why you're about to take this trade and all the reasons why you've got to hold on to that trade to its given target or whatever. It's all about your approach, your analysis, whatever the pattern is you're trading. Because otherwise, if you just, I'm sure many of you, if have at times placed the trade and almost as soon as you put a trade on, you're thinking, oh God, I don't want to be in this now. That's because you're not, you weren't engaged. You've just either jumped into a trade or you've said, oh, that's a nice pattern, I'll take that. But you've not given it sufficient analysis prior to taking it. And then you'll get into it and then you can't wait. You want to get out because you're not ready for it. So the more analysis you do, it helps with your mindset for once you are in the actual trade. Is it possible to live from the profits you gain in the market? I don't know. Even I my last bigger winning trade was in December, and I banked £129,000. What do you think? So Obviously, that's all relative. It's relative to account size. But so I was being a bit flippant there. But is it possible to live from the profits you gain from the market? I think what you're asking is, can you be a full-time trader maybe and just survive on the, say survive, just live off of what your trading profits? Um, I don't actually advise, for many people until you've got a lot of experience to just be a full-time trader. I always advise having a second source of income, even if you are trading full-time, so to speak, and you're in front of the markets. Have another source of income, whether it's whatever it might be. It might be from a business, it might be that you do deliveries in the evenings. I don't know, um, because if you're reliant on that as your sole source of income, the pressure to deliver, because it all comes back down to mindset, is likely to get very great, really high, and it's going to affect your ability to make clear decisions. So I would suggest don't do day trading or trading for a living until you are highly experienced and have another source of income. So it might be that your partner has a full-time job and you do your trading. So you don't have to bring money in every single day or every single week or even maybe every single month, because you have an income coming into the house from your partner. But then when you do have your profitable periods in trading, then they can be highly profitable. So but what you don't want to be doing is putting pressure on yourself, because trading's hard enough as it is. The more pressure you put on yourself, so if you're like on your own and you're trying to trade for a living, I wouldn't suggest it. No. Uh, uh, you're an options trader, but loving hearing the common tips and tricks. Thanks, concept from a real and successful traders. Yeah. Oh, good for you. You're an options trader. So you obviously know what you're doing. Um, but yeah, so coming back, I'm just reading some of the other comments there as well. That it's ironic, isn't it? Because I say, do as I say, not as I do. Because you know, when I quit my job in 2001, in late 2001, I became a full-time trader, and that was my only source of income for a good few years. And but I was reasonably well capitalized. Again, so I didn't have any pressure. I had like 2 years worth of income sat in the bank plus my trading account. So um, lots of people get into trading and they say, right, I've got £5,000, can I, or $5,000, and I want to trade for a living on that. You think that is just so, not going to happen. So yeah, you need to be well capitalized as well. So and the other thing I think when I did it was I was a young man at that point and I was still single as well. So I didn't have any responsibilities of having children or a wife to support or anything like that. So I was taking bigger risks. I look back at it now, and say, oh yeah, I was taking a bigger risk because I didn't have another income, but I was young and I had capital, I had money, so that certainly helped me. What is the acceptable risk reward ratio for you? Um, oh, scrolling down a little bit there. What is maybe an acceptable risk to reward ratio for me? Yeah, an acceptable risk to reward would be 1 to 2. 1 to 2 would be acceptable. For me, um, I'm not saying that I wouldn't bank profits before that. But what I might do is bank a partial profit and then still try and run the other part of the trade to see if I can maybe get 1 to 3 out of it or whatever. So it depends on what's going on the chart. So again, I don't have a static target and say, right, every trade I do, I risk this amount and I look at a 1 to 2 or 1 to 3 risk reward. It's not like that. I read the charts and the charts tell me where where I should be looking to bank profit. So it'll vary from trade to trade. My best ever risk to reward was 1 to 52, I think it was. But one of my members last year had a 1 to 90. I think it was 1 to 89 risk to reward ratio. That was a good trade. um, uh, what amount do you have in your biggest account? I think that's a little bit of a personal question there, Razvan. I think that we don't go around asking everybody how much they get paid from their employer, do we? So, how much does your job pay? So I'm not going to divulge personal information like that, but it's decent. My members know that sort of information, but you're not a member. I'm just here on our YouTube channel. So. Oh, I've caught up with questions. Oh no, I haven't. Do you ever trade crude oil or natural gas? Now and again, JP. Yes, yes. On oil, yes. Not natural gas, no. But I do. I will trade oil here and there. Yes. So I will trade. There's plenty of markets that I will trade during the course of a year. Um, So I'll trade stock indices, I'll trade gold, I'll trade oil, I'll trade any number of currencies, but normally just the major currencies. It's quite rare for me to trade a cross pair, um, but um, but yeah, but it can happen. Um, what's the acceptable risk per trade that you take? I've already talked about the risks that I take. I've already answered that. When someone else has said, how much you do, and I said, look, I trade 6 different accounts. Some accounts I might only be risking zero point 0.1 of 1%. The trading challenge account, I allow. I don't do it on every trade, but I will allow up to 2% initial risk on it. What would I recommend to you? I would keep it below 1% or up to 1%. Um, hope you didn't get mad at me, Razvan. What's that? Oh, okay. No, no, not at all. Okay, thanks, Proto. What was or still is your trading role model? What was your trading role model? Do you mean who? Concept? Do you mean who? I think you mean who was. You've said what was. So I think you mean, is there a person? Is that what you mean? Oh yes, Motisum. Yeah, that's funny. Yeah, if I open an inverse account of my real account, the profits would be amazing. Yeah, yeah, yeah. I mean, for me, still the original market wizards. Quite a few of those original market wizards, like Paul Tudor Jones, Ed Sakota, um, uh, Michael Marcus. Some of those original uh, market wizards had a big impact on me and my mindset. Yes. So that was that book was what made me believe. And as you know, concept, one of the biggest things in trading is you need to get that belief, the belief that you can do it. And that's why I do what I do, with all the stuff I do, like the trading challenges and all these sort of things to help other people believe that they could do it, by me putting my neck on the line and showing what I do to say, look, this is what you can do, So, and by reading that book, that gave me that belief to think, okay, yeah, all right, these are like the best guys in the world. They're worth, hundreds of millions at the time, and some of them are multi-billionaires now. Um, but that certainly gave me the belief. So that was the biggest. I'd say those would have been the biggest role models for me. Yeah. Hopefully that answers your question there. There was no one outside of that really. Um, I learned moving averages, in a different way from a guy. He died now. He died like I think I don't know, 10, 15 years ago maybe. But I never met him. But I just in the late 1990s, I picked up some material on moving averages, and that's what helped me to um, use moving averages the way I use them today. Using moving averages as support and resistance, not just for like crossovers and things like that. So, and using moving averages as I use them now, as having a gravitational pull. Like I said earlier on, as moving averages having, you know, uh, being used as for mean reversion as well. Um, so yeah, but in the main, yeah, you know, those big market wizards in the original books, yeah, very much had a big influence on me. Do you offer mentor or training programs? I don't mentor anymore. I'm too busy with Charlie Burton Trading, but of course, go over to Charlie Burton Trading, go over to the website, and you can see all of the. You can just become a member. There's no courses. There's plenty of course material, but you just become a member, and you can just sign up and become a member, and you can learn all my techniques, and that's all the materials there. So just go over to the website, and you can see all of that. What does it mean when a price is touching the EMA? And if you use the 10 EMA? I don't use EMAs actually. I use SMAs, Razvan. Again, slight differences between. Yeah, I met Mark Douglas concept. I'll talk about that in a second. Um, but yeah, I mean, again, it's personal preference, but there are certain things with SMAs that I use, and so I don't. In the main, I don't use EMAs. There are two EMAs I use, but they're very short term ones. Everything else is SMAs, and there is a specific reason which I can't share because again, it forms part of my techniques that I use. But yes. When price is touching a moving average, well, what does it mean? Well, it tells you that price is back at its average price, isn't it? So if you've got a 10 period moving average and price is on the 10 period moving average, it means it's back at its average price of the last 10 bars. That's useful information. It's retraced to its average. It's mean reverted to what its average price is. Um, Market wizards, yes, giving me beliefs as well. Yeah, yeah. Mark Douglas, I met about 20 years ago over in Chicago, and he told a lot of stories about when he worked in the with the locals in from the CME and the CBOT. So he was working with the local pit traders in the S&P pits and the commodities pits, and would help work on their mindset back in I think mostly through the 90s. I think I'm not sure if it was the 80s as well. Um, and so yeah, Mark Douglas's trading in the zone is a classic with regards to mindset. Yeah. Um, what MAs do I use? I use, well, on the chart here, I'm not showing all of my moving averages on here because I don't want to have them all on when I'm projecting. But I have a 50, a 20, a 200. I use a 100 as well. And the two short term ones on here are a 5 and an 8. Oh, there might be a 5 and a 10. I can't remember. I think they're a 5 and a 10, actually, not a 5 and an 8. It doesn't make too much difference. Yeah, Mark Douglas. Yeah, so when I met him, sorry, I've seen what you said. Um, yeah, he was a he would just tell stories most of the time, and so he uh, I remember him telling us a story. I'll tell you this story, and he was telling us a story. I went over to meet him, and I was getting a tour of the CME at that point, and he was there, and he was telling us a story of back in the 90s. It would have been. This isn't a great story, but um, he was working with a trader, a local pit trader, so who I think at the time in the 90s was worth, he had about 50 million, $50 million that he was trading with back in the 1990s. He was a big local trader. And he, uh, he was going through a divorce, and the divorce started to affect him. And it affected his ability to trade, and he couldn't make money, he started losing money. And then what happened was his wife's lawyer was trying to enforce him to stop trading because she wanted whatever percentage of his money, and so they were trying to get him to stop trading just in case he went and lost it all. So that then put a massive pressure on him as well. So Mark was trying to work with all that. I just remember that story. I can't remember the result of the story in the end. I think it sorted itself out. You know, the guy paid his wife off and all of that, but it did take him some time to get back into it. He was out of it for 6 months, a year, while all this was going on. And then he found his mojo again. He got his mojo back. But I can't remember specifically what Mark was working with him on during all of that. But yeah, there was a big pressure on this guy. But um, yeah, there was all sorts of stories that he would tell you about when he's working with people. So yeah, obviously he passed away, didn't he, a few years ago, Mark Douglas. So which is sad because I don't suppose he was that old. Maybe in his 70s. Maybe he'd reached 70s. Yeah, probably had done. Um, but not an old man, no. Okay, look, I'm enjoying having the chats, but looks like the questions have dried up. We've had a bit of a chat post the figures there today. The S&P still having a think about it below this long-term trend line. I think that's going to be interesting to see if that can have an attack of that at some point. It could consolidate and pull back a bit, but it'll be interesting to see if that tries to break out at some point over the next week or something like that. At least have an attempt at that. Euro dollar, of course, has had a decent day here today. Same with the Aussie dollar here. The Aussie dollar looks like it's trying to break out here of a long-term trend line. If I take, oh no, it's not. There it is. There's the trend line there. I'm getting the time frames. If I go to the weekly charts there, this trend line here looks like it's trying to break out through that as we speak. If I take it back to the daily, again, they may pull back a little bit, but they're trying. A lot of these markets are trying to still break higher at the moment. The New Zealand dollar's probably lagged a little bit behind the others, but of course, it could be working its way, or should be working its way towards these prior highs as well. So it does look that way at the moment. We've got no more major news out, certainly not tomorrow, of any real material substance. So we've had that news now, and so that may well set the scene over the next couple of weeks, as being an underlying theme, really, from that yen news. That Japan news is going to affect the yen over the coming weeks, and therefore spillover effects into the dollar as well. Okay, final. How often? Oh no, I've got two questions. Oh, he was 64, was he? Blimey, a lot younger than I thought. How often do you have a live like this, Charlie? Not as often as I should, but I'm going to try. I'm trying to do them about once a month when we do a live chat, roughly speaking, about once a month. I did one in earlier December, and I'm going to try to do them regularly where we just have a chat like this. What are your thoughts on gold in the short term, Crypto King? Well, gold is up at, at nosebleed levels. Gold has come up into these prior highs from back here, pretty much around the 1900 area. Okay, from back there, it's back at 1900 today. So it is into yet another area of potential resistance here. So what do I think about it? Well, if you'd have asked me a week ago, certainly I would have said, well, or a couple of weeks ago, I'd have said I would have quite liked to have seen it pull back to its key moving averages down here. It hasn't. It's carried on running higher. So I don't even have much of a view on it right now. It's come up into resistance, so we'll have to see if it reacts to that resistance around 1900. My bigger picture view, though, is still bullish for gold. So even if it does pull back, I am in a bigger picture. I have more of a bullish view on gold in the big picture. Oh, really? Oh, that's interesting, Mem. So you used to do all the data feeds for those trading rooms back in the 90s. Yeah. Wow. Um, yeah, Mark Douglas died a few years ago. Yeah, sadly, or a couple of years. I can't remember. I can't remember how many years ago it was now. But yeah, yeah, he was very, very good on the mindset side of things because obviously he was a psychologist. But um, and he worked with a lot of obviously pit traders. That's where he really learned his craft with regards to dealing with traders. So yeah. Okay, I'm going to love you and leave you, and hope you enjoy the rest of your days or evenings. So I'm going to be off to bed shortly. I always have an early start ahead of my next trading day tomorrow. So what I'm going to be working on tomorrow is myself and my members. We're in certain positions at the moment. I'm not going to disclose here, but so we'll be working on. Those positions with regards to finessing things like potential profit targets, any trade management, and all of that sort of stuff. So that's what I'll be doing tomorrow. So I shall leave you to it. Enjoy your evenings, and I'll see you soon. Thanks ever so much for coming along. It's nice having a chat. Yeah, maybe, mem. Right, I'm going to end the broadcast.